Now, the problem that we're about to go through now shows us how to generate a pro forma statement with financial ratios. And this is a common thing that banks do, accounting firms do, things like that. If you want a loan for a new business, the bank wants to see a set of financial statements. Well, how do you do that for a company that doesn't exist? Well, you do what I'm about to show you here, and you do what's called a pro forma statement. Now, in this particular problem now, they give us the balance sheet, this here, and they give us a piece of the income statement. And they give us some of the information off the balance sheet. For instance, they tell us that total assets is going to be $300,000. They tell us that long-term debt is going to be $60,000. And they tell us that retained earnings is $97,500. Now, with that information now, we're going to build the balance sheet and we're going to build this section of the income statement. The first thing you should note now, and remember from the lecture on financial statements, the left-hand side of the balance sheet has to equal the right-hand side of the balance sheet. So the first thing we would say is that, well, if total assets is $300,000, then total liabilities and owner's equity also has to be $300,000. The next ratio that I used, that I wanted to know about, I used the total asset turnover ratio, which is sales divided by total assets. And they tell us the industry average for this is 1.5. Now, I don't know sales, but I do know total assets. And so 1.5 is going to equal sales over $300,000. Solve for sales by taking $300,000, multiplying it by 1.5, you find that sales has to be $450,000. Now that I know sales, I can do another activity ratio, which is the fixed asset turnover ratio, sales divided by net fixed assets. So I know that now that sales is $450,000. I don't know net fixed assets, this number right here, but I know the fixed asset turnover ratio is 3. Again, 450,000 divided by 3, that gives me net fixed assets, in this case, $150,000. Current assets plus fixed assets equals total assets. So if I know my total assets to be $300,000, and I know fixed assets to be $150,000, total assets minus fixed assets has to be current assets. So $300,000 minus $150,000, that means total current assets is $150,000. In the next video, we're going to do another set of financial ratios and continue building this balance sheet and income statement.